Welcome to Luca is a Billionaire, where the only thing I invest in is your answers.
In this video, I will explain market versus limit orders. A market order is a request to buy or sell a security immediately at the best available current price. Conversely, a limit order lets you specify the maximum price you're willing to pay or the minimum price you're willing to accept. This distinction is crucial for managing your investments effectively and achieving your desired outcomes. Market orders are best when you prioritize speed over a precise price. If you need to enter or exit a position right away, especially with highly liquid assets, a market order ensures your trade goes through quickly. They are ideal for stocks with high trading volume and narrow bid-ask spreads. Just remember, the exact price might fluctuate slightly from what you see on screen. If you're finding this video helpful, please hit that like button and subscribe for more valuable content. On another note, are you looking to simplify your daily routine? Make meal prep a breeze with these fantastic leak-proof containers. They're perfect for keeping your food fresh and organized. Check the description below for the link and other great deals. Now, let's get back to the video. Limit orders give you control, allowing you to set your desired entry or exit price. This is particularly useful in volatile markets where prices can change rapidly. You can place an order to buy when a stock drops to a certain level, or sell when it rises, protecting your capital and maximizing potential gains.
Thanks for watching and please subscribe. It's the best investment you'll ever make.